Hello traders, welcome to the rabbit hole, and let's dive right in. Today, we're going to dive deep into Bitcoin's recent price action, focusing on the retracement we've been witnessing over the past few days. As anticipated, price has made its way down to the key levels we had marked on the chart earlier. Specifically, it tapped into the monthly level that we identified, and this area also held strong confluence with several other indicators, which made it a zone of high interest for us. Now, one of the scenarios I was monitoring was the possibility of price dropping down and giving me a clear setup to get involved. Well, the setup did present itself, though, interestingly, it formed slightly higher than where I had originally expected. But let's not forget, in trading, it's not uncommon for price to move in ways that aren't perfectly aligned with our expectations. Flexibility is key here. Often, price can deliver setups later than we hoped or at slightly different levels. But this doesn't make the setup any less valid, rather, it's a reminder of the importance of being adaptable and patient. So, what did I do? I took a scalping opportunity at one of these key levels. Now, for those of you who are unfamiliar, scalping refers to taking quick, smaller trades that capitalize on short-term price movements. This isn't for everyone, but for me, it was a viable setup. Of course, some traders might have simply bought support or resistance levels, which can work as a strategy depending on the market. However, for those of us looking for a more solid structure-based setup, the key was to wait patiently for a clear structure break. And that's exactly what Bitcoin did. With the structure now broken, we can start to plan out both bullish and bearish scenarios. Remember, a good trader always prepares for multiple outcomes and remains ready to adjust their plan as new data comes in. So let's begin by discussing the bullish plan in detail. Bullish scenario. In the bullish scenario, we'd be looking for a retrace into the area that was previously broken to the upside, which could now act as support. This is a crucial concept in technical analysis. What was once resistance can turn into support after a breakout. So, we'll be watching this zone closely. Once price retraces into this support area, the next step is to look for signs of bullish momentum on the lower timeframes. These signs might include higher lows, bullish candle formations, or even divergence between price and indicators like CVD. Each of these can serve as confirmation that the buyers are stepping in. At this point, traders have several options for how to enter a trade. You could preset your limits in anticipation of price hitting certain levels, take a more aggressive YOLO approach by entering without waiting for confirmation, or use a more conservative method by waiting for multiple structure breaks to confirm the move. It's important to remember that trading is highly individual. Each trader will have their own entry model and risk management system. Some prefer using technical indicators like order flow or market depth to confirm a trade, while others rely purely on price action. There's no single right way, but it's essential to have a consistent approach that works for you. Now, let's talk about invalidation. For this bullish scenario, the primary invalidation point would be the low that was formed on Thursday. If price dips below that level, the bullish setup is likely invalid, and we'd need to reassess the situation. Our initial target in this case would be the previous high, as it represents a logical point of resistance where price might stall or reverse. Bearish scenario. Now, moving on to the bearish scenario. In this case, if Bitcoin rises from its current levels, takes out the previous high, and forms new swing low pivots at those highs, we could be looking at a potential structure break to the downside. If that happens, traders could consider shorting the market, targeting a move back into the same support zone that we were looking at for the bullish case. However, here's where things get tricky. If the level gets hit after taking out the previous high, the dynamics change. The risk increases because the level, which was initially strong support, could now be weaker after liquidity has been swept. So, while this could still be a tradable level, it's essential to proceed with caution. A preset or YOLO entry here could be risky without confirmation of a solid reversal. That's why it's important to pay attention to how price interacts with these levels, and not just blindly trade based on support or resistance. If Bitcoin fails to hold support and continues making lower highs and lower lows, this would confirm weakness in the market. A clear sign of invalidation for the bullish scenario would be if price shows no strength at all, breaks down through key levels, and continues to the downside. Looking at the weekly chart. Now, let's zoom out to the weekly chart. This broader perspective gives us valuable context for how price might behave as we move into the start of the new week. Assuming the bullish scenario plays out, we could expect a retrace into the support zone, followed by a structure setup similar to what we discussed earlier. A rise from this setup would likely form the weekly wick, and if Bitcoin reclaims the weekly open, it could trigger a continuation to the upside. This would be an ideal situation for those looking to trade the higher time frames. On the other hand, the bearish scenario would unfold slightly differently. If Bitcoin rises, takes out the previous high, and then loses support, this could form a weekly bearish wick, signaling a potential continuation to the downside. This is where we'd need to adjust our strategy and work with the new data the market provides. Final thoughts. Now, it's worth noting that none of these scenarios are guaranteed. The market can do anything, it could keep ranging for longer, or we could see a sudden pump or drop. That's the nature of trading. The key is to remain flexible and work with the information you have in front of you, adapting to what the chart shows. And that brings me to a critical point for all traders: risk management. Whether you're taking a bullish or bearish setup, you must have a plan for managing your risk. This means knowing where to place your stops, how much you're willing to lose on a trade, and never over-leveraging your position. In trading, no setup is ever a sure thing, so protecting your capital should always be a top priority. As always, I hope this breakdown was helpful for you. If you're enjoying this content, don't forget to like and subscribe to the channel for more in-depth analysis. And please, make sure to read the disclaimer: I'm not a financial advisor, and this content is meant for educational purposes only. Have a fantastic weekend, stay safe, and I'll see you in the next one.